The beauty of good money, gold and silver, is that it's globally accepted and has the broadest base of buyer. So if you get your money right to begin with, then you have a much better chance of buying the other things that you need. If you don't have that in place, then you better have everything else in place. Tell me, what supports a currency? And how can the government create new money? And what's the answer? Full faith and credit. As long as you trust them, you'll keep loaning them money. This doesn't require interest rates. This doesn't require confidence because it's real and it's used across every single sector of the global economy, and it's been considered money for thousands and thousands of years. And maybe that is why China's gold binge extends into its 7th month as holdings climb. Because whoever holds the gold holds your power. Right as they're trying to take all of our freedoms away, take us into central bank digital currencies so that they have full surveillance on everything that we do. This is critical. China knows it. So do global central banks who have bought more gold than they ever have since we were transitioning into a new system. And what do we know? 7 in 10 central banks surveyed believe that gold reserves will increase in the next 12 months. This is a 10-point increase from last year. 7 in 10. Who's not? Well, let's hope there never is an audit of the U.S. reserves. That's what I can tell you. Because central banks are buying gold to have global purchasing power and global choices and global power. You need to do it for the same reason and many others. This runs no risk, right? Physical gold, physical silver in your possession, no counterparty risk. 0. This other stuff, all counterparty risk. Any contract is only as good as the counterparty to that. And we've already seen an increase and that sovereigns are really in a precarious position. The reason why I'm also saying that the U.S. is not immune is because, again, the Treasury bond is the foundation of the global market economy, the foundation, right? Well, we know we've been butting heads with China. We know that there's virtually no purchasing power left in any government-based money in the world, right? We know that these are truths. So let's divert attention over here. But China's U.S. Treasury holdings hit a 12-year low because of the rate hikes, because of the tension. Why? And yet at the same time, their gold imports are up 60% because they are diversifying away from U.S. dollar holdings. It has been such a huge boon to us that live here in the U.S. that the dollar has been the world reserve currency. Because in theory, this is not in reality anymore, but in theory, we were the only country in the world that could actually print from debt the money that we needed to repay our global bills. Everybody else had to buy dollars in order to do that. Well, those days are coming to an end, and no country retains that position forever. So you can see China's holdings of U.S. Treasuries, look at this, the lowest in over a decade, but the gold raises their reserves as the U.S. debt declines. And it's not just in China that we're seeing this happen, because we've also witnessed the U.S. weaponize their global money system, SWIFT, against those that we don't like, that aren't doing what we want. Isn't that interesting? First of all, what supports fiat money? Okay, what supports this garbage, right? Full faith and credit of the government. Translated, as long as you trust them, you have faith, then you will continue to loan them money. And extend them credit. So it is that confidence piece that really supports the money, and rapid inflation makes people question their confidence in the system. But it is critical. So what's been happening? Now, this is the most current sovereign debt in default by the Bank of Canada. They put this report out every year. But this observation only goes to 2021. So that was before globally central banks had begun to increase the rates at a rapid rate. Now, let me point something out to you. This red area are advanced economies. Going all the way back to the 70s, you did not see any advanced economies default on their government debt. You saw a lot of defaults, actually over 4,800, but you did not see advanced economies until the sovereign debt crisis in Europe in 2013 and 2014. Since then, looks like it's pretty consistent, doesn't it? And again, that last observation was 2021. And then the central banks began to raise their rates. So that means a few things. Number one, all of the debt that's been issued when we were in zero interest rate policy for the last 15 years, that is all underwater. Remember, rising interest rates means lower market value of the principal, right? Current market. If you hold it to maturity, the assumption is they're not going to default like you're seeing here, and you'll at least get your money back, though it'll have a whole lot less purchasing power. For somebody, that's a good deal. I'm not sure it's so good for the creditors. The beauty of good money, gold and silver, is that it's globally accepted and has the broadest base of buyer. So if you get your money right to begin with, then you have a much better chance of buying the other things that you need. If you don't have that in place, then you better have everything else in place. So the volatility is at elevated levels in the most important market on the planet. And the new treasury issuance, because we have now just eliminated the debt ceiling or suspended it for a while, right? So we'll see how much new treasury debt they're going to issue, but they're issuing this, and that sucks up even more market liquidity. Because who's going to be buying it if the other foreign governments and the Federal Reserve is not buying?